Good morning, guys, and welcome to today's edition of the London Session Open. Today is April 20th, 2020, and it's. Let me just check something here. And it is 9:36 a.m. in London when I'm doing this market update. Let me close down some windows. I think we have a few ones. There we go. All right, good. So we're going to take a look at the markets as we usually do at this time of the day. And there's quite a lot happening in crude oil in particular. So we're going to talk about that. We're also going to cover, of course, all the other major currencies and major indices and commodities. If you do have any questions, you're most welcome. Just put them in the chat box to the right, as you can see. And either if you're on YouTube or on the Investing Cube homepage. So, as well, if you just want to say hello, then that's great as well. Okay, good. So let's just begin then, and we're going to begin by taking a look at the price of crude oil. I think it's down with 20.95% right now. I'm talking about West Texas crude oil. So, West Texas crude oil was trading just above the low here from March 30th, and that was the low for the cycle. And we said as long as you're above, we can go up a bit. And I said if we take this out, we can go down. And this target is in the break here, it does suggest we come down to 10.19 more or less. And the reason for this, you have like 1, 2, but 3 lows at the same spot. Difference in high and low. Take that out, go down. So if you just take this one and this one, this is a double bottom. And the difference between the high here and the lows, that gives you a target. So you can see it's going towards that direction. Now, let's not get too excited. This contract will expire, I think, tomorrow. And if you're trading with a retail broker, they will close out your position at 7:30 or something or so. It depends where you are, of course. But as the session comes to an end, they're going to close that out because this is a futures contract. So if you actually still long this position on expiry, which you can't with retail brokers, you will actually get physical oil. So you get actual barrels. Now, apparently, according to the Financial Times, the reason why we're having that slide here today, why the market's going down, is because it's quite expensive apparently right now to hold on to actual physical crude oil, and that's why people are just selling their contracts because that's better for them apparently than to actually get actual physical oil. Or probably what's even more likely, I think, is the fact that people were just speculating here and they were just hoping for it to go upwards, and they never had the intention to actually hold it until expiry. So that's why they're all just closing out now. If you take a look at the other futures contract, so this is the May contract. So the May will expire, I said, tomorrow. Then it's going to switch over to the June contract. And the June contract looks a bit different. The June contract is still sort of above, and this one hit a low here of on March 18th of 20.64. And I draw these lines before, but the question is, haven't we already maybe taken? I think this is probably the more important low here. So what we can do for tomorrow here when this switches over, unless you want to switch over now, because it's possible to trade this. In fact, with many brokers, this is what you're looking at. I think maybe if we take out this low here at 23.25, we might go a little bit lower. I think that makes sense. I'm not sure exactly if that's the best thing to do. If we look at it from a 1 hour, let's take a look at it from a 1 hour perspective. I think that's better. I would not advise against selling here. I usually don't advise, but here, if you really want to be selling, then that's what you'd be looking at. And I think we can be better till 26.41. That's a short-term trend in that contract, but we're just below major lows, so just around major lows. So maybe this is it. Maybe that's the last panic selling in that contract, and then this will just go upwards. Maybe. We'll know that when we trade about 26.41. So for now, we'll leave that as a trend finding level. I'm probably going to put it down and pull it down, and we'll see what happens here. But if we take this out, we're probably going to go a bit lower, as I said. Is it easy to trade? No, it's definitely not. So it's again better just to step away, I think. What's easier to trade then? Is there anything easier to trade? Well, we have quite a luck with good luck with the German DAX, right? So we've been saying to buy many times, and it's been going good. We talked about buying here. I think we got stopped out here, but then we turned bullish here. We've been bullish for quite some time in this market. And the last setup, just a minute. Last time when we said it was to buy down here, and almost got stopped out, then eventually went up. This is a good level to book all the profits. And if we go down to 10,415, I think people are gonna look to buy again. We'll stop just below 10,088. That's what I think. As for the S&P 500, the S&P 500 as well remains bullish. The idea for me last week was to buy, but not here. I wanted to buy slightly lower, so we missed out on that one. The market though went upwards, and if we go down to something like 28.10, I think people are going to be buying again. Stop loss orders for these people are probably going to be just below the April 9th low at 27.04. We could also just take out this level and we slowly go upwards. So we're pushing upwards and upwards. And you might ask yourself, why is it like that? Well, the number of infections are down dramatically. So it's not increasing as much as before on a percentage basis. What else? Death rates in many places looks to have peaked as well. So less and less people are dying. That's very positive. As well, during this period, because of the emergency, a lot of governments have built up, they create more beds, and I don't know all the data on top of my head, but I know, for example, in France, that the number of people that needed ICU beds have actually dropped to a 2-week low. So the capacity have increased. At the same time, we're having less and less infections. Things are going back to some sort of normality, and that's why the market is bullish the way it is. However, though, we need to be a bit careful. I'm seeing more and more people turn bullish. So remember, on the way down, people were like, "Oh, what's going on? The world is collapsing." And we're down here. People are gonna say, "All right, the world's gonna go under. We're gonna go back to Stone Age. I need to get myself a club." And everything is just going to fall apart. That was the best time to buy. Now the market is going up and up and up and up because people start to see the end of the tunnel. There's discussion about opening up the UK, New Zealand. You have places like Norway, France, Spain, Germany, all this talking about opening up or have already started to open up. So that is now being priced in, and that's why when we go from the most extreme, now we're starting to go to the most positive. So remember that around the time probably the US is going to open, and as far as I remember, New York has decided to open up in about 2-3 weeks. So they extended the lockdown for about 3 weeks, I think they said. Maybe around that time, if the S&P is at 3,000 or 3,105, then that's going to be priced in. And then it's not a big surprise to know. Imagine that they open up in May. Well, obviously the numbers from April, because the US is still closed and a lot of Europe is still closed, the numbers for April, they're still going to come out, are probably going to be bad. The numbers for March was terrible, of course. But then we're going to be up here. And in May, we're just going to go much higher, I think, if it's a situation where people go back to work much quicker. And you know what, there's some quite interesting data on that. I saw some numbers from Norway. You might say, who cares about Norway? I know what you mean. It's a small country. Doesn't necessarily, what they do doesn't necessarily apply for the rest of the world. But I saw some comments, and they had a quite sharp rise in the unemployment rate. And it was similar stuff we've seen in the US. And there was, in their data, you could see that 90% of this is temporary. So if you look, I think initial job descriptions in Norway, I think they had declined from that initial peak. And it's what I've been saying many times before. If a lot of these 22 million of losses of jobs in the US are temporary in nature, then maybe half of these are going to come back to work. You're still going to have about 11 million people out of work, but at least maybe half of them come back to work, and then another with 2.5 million, so you still have 3 million losing jobs. But then we go back to some sort of normality. It's not going to be as before, but if that's the case, then stock markets here are probably properly priced. So we need to be mindful for that. This is not the time to go all in. It was down here. Here we need to be careful, because it could be a situation we go in and then everybody says, oh, it's time to buy stocks again. And at that time, we're probably going to start to see the price go down a little bit. And if we would revisit the lows, then that's probably more interesting. Then you have people that are super bearish. They've been bearish for all their lives. There's some people that have been bearish, all bearish all the way up. So you need to be very careful who you choose to listen to. I know some people that, they've been calling for recession since the last recession, and they're all surprised about the money printing and the way the governments react. But if you're gonna become an actual investor and trader, you need to learn the rules of the game, and you need to learn to play them better than everybody else. There's no point going and complaining and saying, no, I lost money because the government bailed us out. I mean, of course the government is going to bail us out. They do that all the time. At one point, things will go crazy, but I think we're going to be able to sort it out that time as well. Will it be different at one point? Yeah, definitely. But this is not 1921. At 1921, the governments didn't help anyone. And now at least there's some help. So again, let's be bullish for now. But be careful, as the scenario where everything is good is swiftly being priced in. Gold. So gold here, the idea was to buy here at 1675, which stops just below 1640. I continue to be bullish. There's no reason to make any changes. Of course, it had quite a big sharp move, and then it's coming down, and I'll remain bullish for now. Euro USD, the market here, I had to repaint this one. So I had this as a triangle. I said a break to the downside can take you down lower, and as long as you're above these levels here, I'm going to be bearish. But I was looking at this morning, and it doesn't look like a proper breakdown, and in fact it just looks like this triangle morphed into something different. And this is the problem with triangles, and that's why I warned you about it last week. In fact, I should always ignore triangles. That's what I do. I never really trade them, and I just try to do something like this. So I'm going to be neutral now between 107.66 and 109.92. If we go out here, we can probably go bullish. If we take this out, we can probably go bearish. But this, the way this looks like, it's going to trade sideways for another week or two, if not a little bit longer. Here's GBP versus the USD, which is trading sideways between 124.02 and 125.27, with a bearish move to the downside, probably leading to a decline to 122.81. Whereas the break to 25.27 can take you up to the high here. Quiet here as well. Here's the dollar versus the Japanese yen, where, as I've been saying over the last few weeks, they're probably selling at 109. It's probably a good idea. We stopped just about 109.55. The alternative is taking out 106.86. Can probably trade, cause the market to trade a little bit lower. Otherwise, if you look at this is much like the Euro USD. Had sharp decline at the beginning of the year, actually sharp rise in the beginning of the year, and then a sharp decline, and then a sharp move to the upside. When this happens, people get scared and they take a step back and they don't want to trade, and things start to go sideways. That is the curse of the currency markets right now, because they had a very sharp decline, very sharp move to the upside. So neither bulls made a lot of money and neither bears made a lot of money, unless they perfectly timed this. But it's more likely that both the bulls and the bears, on average, came out quite bruised, and that's why they're now taking things very easy, because they don't want to get hurt again. Okay, let's see if you guys have any questions. Okay, so if you do have any questions, you can just put them here in the chat box, and I'll do my best to try to help you. If not, I think we're just gonna wrap things up. I know most of the time we have not had time to answer questions lately, just because we started a little bit too late and so on and so on. But today we still have we still have a bit more time. Okay, Is there anything you want to keep an eye on for this week then? Well, you want to keep an eye on the market PMI figures. They're going to be out on Thursday. So on Thursday, they're going to be out. And there is the number for April. The PMI indicator is just an indicator where they ask corporations a few questions like, have you hired more or less people or unchanged compared with last month? So they just can choose three options. Have you produced more goods or more services this month compared with the prior month? Yes, no, unchanged. So they ask about 5 or 6 questions like that, like backlogs, delivery times, input prices, output prices, and then they create an index, which at 50 shows that that sector is growing, and below shows that the sector is contracting. So the numbers for March, as you probably guess, were bad because of the shutdowns, and probably the numbers for April are gonna be worse, I think. But for some reason, the expectations are for them to improve. Not sure how that's gonna work out. For example, for the UK, the shutdown was on March, I think on March 23rd. So you had about 23 days of some economic activity, and then you have the shutdown. So numbers should be lower this month. And then as well in places like Italy, they're saying shutdown was on March 9. So you had 9 days of some economic activity and then no economic activity. In the US as well, I think they shut down on March 19 and March 22nd, and March 19 in New York, and March 20, in California, and March 22nd in New York. So you had about 19 days of data, and then you should have very weak numbers again. So that's gonna come out. Is it gonna move things, change things? Not necessarily. I think, as I said before, you need to be probably listen to your technicals, look at your charts, look at the intermarket correlations. So when the data comes out, how does stock markets react in US, in Europe? How does Eurodollar react? How does gold react? How does crude oil react? You can even look at bond yields. And when you see a big move happening across the board, then that could be your indication that something is changing. Many times we have all had all these bad numbers, and the market has totally ignored them. And the reason for them is, again, the people understand that this is temporary measures. And at least the people I met, they're all getting paid from their governments. Of course, I'm in London, I'm in Europe, and I know in other parts of the world it's not like that. But it's not as bad, I think, as a lot of people think. Will oil drop more before the next month? All right, that's a good question. Simon is asking this. Simeon, sorry. I think oil is obviously at very low levels, but that's West Texas crude oil. I think if we look at Brent crude situation, I think the situation is a bit different for Brent crude. Okay, this is Brent crude, and it's actually quite interesting. Brent crude is going down here as well. You can see it's breaking down below last week's low, so it does look like it can go down a bit more. So it wants to push maybe down with another 16% or so. In the longer run, I think what will happen, and this is the actual benchmark that the Saudis look at, that the Russians look at. It's not West Texas crude oil, which is, as you know, trading substantially lower. It's trading at, this one's trading at 26. Again, I don't know which future this is, but you get, the West Texas is actually more depressed. I know that. If you look at it from historical levels, I mean, I think what's going to happen is like this. Right now, nobody wants crude. And they're not going to want crude immediately anyway. And the EIA, International Energy Agency, they're projecting that whatever was the demand of last year is going to be down with 10%. So demand is going to be down with 10%. Now, what they have already committed in OPEC Plus, in that OPEC Plus deal, is to reduce supply for 10%, but just for 2 months, June, July. I think from August, instead of cutting by 9.7 million barrels or so, they're just going to cut by 5.6, and then in January they're even gonna cut less. So I think what needs to happen here, this looks to be going a little bit lower, and unfortunately I don't know, but it looks like at least Brent crude is gonna go down, could go down and revisit its lows. So I think it can become weaker for slightly longer, yes. But then eventually what's going to happen is that OPEC Plus and all these people are probably going to say, this is unsustainable. And then they're going to come out with a bigger package. At the same time, I think crude oil demand will pick up at one point. So long story short, maybe Brent is going to go down again with some other 16%. And maybe that could be a little bit of an opportunity to buy. But because it takes time for demand to pick up, and it's probably going to take a few months for things to develop again, holding on a position in oil, what needs to happen is that you probably need to hold it for maybe 6 months or so. And then maybe from 6 months, it might go up a bit. So if you have that long-term view, then let it go down a little bit, and then maybe one could look to buy a bit. But one shouldn't go all in like in all these cases, because it could easily be it goes down with a bit more, and then it has that final blowout where it sees it drop another 30% or 40%, and then depending on how your risk appetite is, one could buy a bit more, and then you would just hold that for like 2 years or so. That's what I would do. So it's a bit risky. The alternative, which is probably better, so you don't have to buy right here, is that you can just wait for the trend to turn bullish. And clearly it's not bullish yet, not in Brent crude and not in West Texas, because in Brent crude we probably need to take out 30.42 to turn bullish yet. And then if you look at the West Texas crude oil, the June one, sorry, that's the wrong one. The June one, here as well, we need to take out the highs. So probably better take a step back, wait for the technicals to give you a good signal to buy, and not just buy blindly unless you're very confident and willing to hold the position for about 6 months, maybe a year, for this to recuperate. Okay, we're gonna wrap things up. I need to will it spike a bit after the OPEC deal? Yes, definitely. It could spike a bit after the OPEC deal. So if we get an OPEC deal, a new one, which I think could happen, they're gonna start to implement from May. They're gonna start these cuts. If nothing happens in May, then maybe if the prices don't stabilize, then maybe they're gonna come out with something more after that. And so maybe you need to wait a little bit. And of course, if OPEC comes out with a deal, it's gonna spike. It's the same thing like stock markets. If they find a cure or a vaccine that works, we're just gonna add another 10% on that week, maybe even over a 2-day period. And there will probably be some vaccine or cure for this at one point. That seems likely. So if you think there will be a trade deal and you're happy to hold on to it for a few months, then maybe now it's the time to look at it after it declines back to the lows. So let it decline with another 16% or so, and then maybe there. But you just need to make sure, be careful, don't put all eggs in one basket. Okay, guys, be careful out there. Again, I'm giving you my support and ideas here, but ultimately you're responsible for your own trading accounts. Please remember that. A simple rule I use: I don't risk too much money on one single individual trade. That is how I can remain trading after so many years. That's the number one trick, I think, keeping risks low, because there's always going to be years when you don't do any money or very little or have losses, and then you have other times when you do very, very good. Simeon, have a great day, and everybody else that is watching, have a good day as well. Don't forget to click on the video, don't forget to like it, you do like that, and then up here there is a like button, very straightforward. Click on that, and if you're watching a recording, you can just leave a comment. Have a great day, guys. I'll see you guys tomorrow around the same time. Thank you very much, and bye-bye.